Hello, everybody, and welcome. This is Mark Newton. I am the head of technical strategy at FSInsight. I hope everybody's enjoying a wonderful summer, happy, safe, and staying cool, of course, in this record heat wave that many of us across the country are experiencing. This is your hour, so I want to appreciate, first of all of you for showing up yet again. Thank you for your support. For those that are new to this, you can go on to FSInsight /technical/strategy and actually upvote your picks of what you'd like me to talk about as we do this each month. So for those that are wondering, how do I come about the list? That's simply part of the process, and you have to go onto the website and really vote what you want. At the conclusion of today's little session, I'm going to be offering up some of my own personal favorites, both longs and shorts. So I hope you'll accompany me to the end. For the time being, we'll start off right away and just get on to looking at markets, and I hope you enjoy this. It will be a replay, and I think you'll be able to access what I've said today. So feel free to let me know if you have any questions. And of course, if you have comments, suggestions, please send an email to inquiry@fsinsight.com. They're the ones that can see what it is that you want me to discuss, and they oftentimes can respond to you in a much quicker manner than I can via Twitter and public comments. And of course, many of you know that it's very difficult for me to often respond to comments. I get quite a few. So without further ado, let's talk about where we are. So S&P had a very, a little bit of a stalling out in the last 48 hours or so, the last couple trading days. And I've talked about that in some of the notes. Here's just a chart of S&P futures, which I often find helpful, not only to dissecting some of the shorter term waves. As you can see, really this area right near 39.09 is really the first important move off those lows. So when you come back and test that level, that's going to be important to hold. And if that breaks, that tells you that we can have a much bigger correction. I personally do not think that any pullback likely is going to break the lows from mid-July. And so that was made almost about a month past when the actual all-time low, or this year's low, was made back in the middle part of June. That often is very important. And I just want to run through, a couple of charts so we're familiar with the structure of the market and how it looks now. There's been a lot of questions as to what the wave structure is, whether we've seen truly enough capitulation to argue that we've seen a real bottom. My cycles, of course, I used two different composites. Both of those did bottom in mid-June and then double dipped in July, and then they start to turn higher in August. Now, there could be a period of choppiness. This is a very important week. We have not only a chock full of tech earnings, but also the all-important Fed meeting. So any sort of pullback to this, I would expect should hold 3,800. This, though, is a bigger line in the sand for S&P cash, which, of course, 37.25 is going to be the level that really can't be broken without thinking we're going to have a bigger pullback. Right now, I'm not expecting that happens right away. I think that any sort of weakness we see over the next 1 or 2 weeks likely is going to prove viable, particularly as we enter the middle part of August. That's a pretty key turning point, which I think is going to be a possible low. And then we should have a pretty sharp rally up into mid to late September, even early October. So, tough. I know that a lot of people are saying earnings revisions need to happen. We need to take earnings down. This is not an hour-long show about earnings, but I'll simply say that a lot of that seems to be consensus. That seems to be built in. Pessimism right now is rampant. We've gone from worries about COVID, of course, and, worries about the stock market and Fed policy, to worrying about inflation. And most recently, of course, we're all worrying about, whether the Fed is going to hike too aggressively and throw us into a recession, particularly with signs of gasoline prices falling dramatically of late. In the last 30, 40 days, we've seen movement straight to the downside in gas. So that is helpful. And none of that was recorded in the CPI of that we heard from June. So, my thinking, and I know Tom Lee believes this as well, is that, we ought to be close to the end of these big spikes in CPI. Things should gradually start to pull back. So I think, in general, if inflation expectations are lower, that could put the market in a sweet spot where we can actually rally off of this and we can see multiple expansion at a time, even if earnings do come in subpar. Near term, though, I do think that weaker than expected technology, earnings are a possibility. I'm not a fundamental analyst by trade, but, we have seen some evidence of a few things starting to stall out in recent days. And a lot of that's been tech driven while energy has rebounded. So I think in the next 1 or 2 weeks, that probably continues, which means that growth versus value will show a little bit of weakness while energy likely will gain suit. So just to really, drill down on the most important levels for S&P, it's really going to be, of course, this 39 in the very short run. That's already been broken by the Qs, which, of course, was just the lows from late last week. Under that would take us down to 3,900, and then, of course, 37.25. The Q chart, as I promised, we see that Qs have taken the lead in weakening. We're already under, those levels of 300 that were hit right when the S&P bottomed that time. So this is going to be the main line of the sand, which is right near 295. You can see the big consolidation intact, and this has importance not only based on the peaks from the 18th, but also the peaks on the 8th, and also the peaks in late June. So we have a multiple, number of different areas where this all peaked out. Now that becomes very important support on the downside. So when we look at daily charts of the Qs, we note that, there has been, a pretty decent bounce of late. A lot of this has been tech and growth driven as rates have pulled back. My own thinking, of course, is that rates likely are going to turn higher for a final, move up to sort of near 350, 360, and then roll over. So if that happens, then yes, we could probably see a little bit of a pullback in growth in the short run. I noted, things like the SOX, for example, had gotten up to test pretty meaningful downtrends, and now that's been one of the weakest areas over the last couple of days. And so, keeping in mind where these downtrends do intersect oftentimes is very, very important in the bigger scheme of things. Let's take a look at IWM, and similar to the Philly Semiconductor Index, this has gotten up right to near very important short-term resistance based on trends going back since last November. Last November was when the broader market peaked out. Of course, not the S&P or the Qs, but we saw Nasdaq Composite, we saw the transports, we saw the Russell value line, we saw a number of things that peaked out. Breadth started to nosedive. That was instrumental in really letting all of us know that we were close to a major peak in the market. Oftentimes, I'll look for these changes in advanced decline where markets will sell off sharply, and we see a move back to new highs. None of those things start to reappear and move higher. So that gives us our so-called negative momentum divergence. And the S&P and the Qs did peak out at higher levels in January, but of course that proved to be the peak for the market this year. But, as we've talked about for some time, broader markets started to peak out, mid last year, September through November, with many things peaking out in November. So right now for IWM, it's going to be important to get over 185. That's really the key line in the sand. Some people could also say, this 191 level from back on the 7th of June is also important. Getting above that would be a big structural positive development that would be very positive and very bullish for the market. Until then, I can see us backing and filling a little bit, but the key is going to be holding July lows, not only in IWM, but really on all the indices. And so that's really what to look for. As I talked about in some of the notes, we saw a bottom based on sentiment and cycles. And then recently we've seen the fact that many of these indices have come and given us structural reasons to be more positive. We saw some real acceleration in breadth where, over 90% up day, where you see the percentage of the volume as part of the total, very, very positive. And that, is just one piece of the process. But, that coinciding with the cycles and the fact that technology is working so well was a pretty good reason to think that markets were starting to bottom out. Everybody wonders if it's a bottom or the bottom. Always very difficult to say that at the lows, but as we start to make more progress off the lows into September, I'll be able to take a look at the market structurally and give you a lot better idea as to whether there is a possibility of a pullback to new lows. And that could be, very much the case into early next year. A lot of my weekly cycles do bottom out in the spring, really April timeframe, March, April of next year. So my thinking is that, we've likely put in a decent low for this year. we'll see the extent of the rally off that low. Now let's get into some of the favorites. I've grouped these based on sector because we had quite a few, and this might be interesting feedback. A lot of different FANG stocks, a lot of technology, also a lot of energy. And so that really shows you where the interest is still on many of these names. As you know, I tend to use trend lines on all different time frames in terms of how I look at things structurally. And, this is really what NVIDIA is showing us, in that the little breakout that we saw back on the 15th was very important in getting above a level that it held for about a month and a half. That served to change this little minor trend from being lower lows, lower highs to now starting to turn higher. Volume did expand on this move. Now it's starting to give back a little. So the most immediate area for those that own NVIDIA or are looking to buy would take a look at as to whether this stock has officially bottomed for the year thus far is going to be the July 8th highs. That's at 160.37. That's the first swing wave off those lows. Holding that and turning higher again would create really the first 5-wave advance off the lows. That would give me a lot of confidence that many of the semis are really starting to bottom out and do well. For the time being, over the next week or so, this should be an area to consider buying dips. So about another $7 down. Of course, moving above 181 spot 44 would be important and bullish, but it would also likely serve as the 5th wave up from early July. So, in general, it's going to take time. We don't go from low to high right away. These moves oftentimes, particularly on the extent that, many of these stocks have suffered immensely, they take time to really try to bottom out. So we've had a great move off the lows. Now semis are starting to consolidate a little bit. I think in the short run, that probably continues. the entire, auto retailers. The auto retailers have been, of late, that's probably not an immediate buy for me here. I just like the overall level of strength, but it has started to, wane a little bit, and volume has picked up on the recent break last week. So I guess you can cancel that from the list in the short run. I do think that probably weakens a little bit, but I do love the space, and I think that would be something to own. Okay, how about a few shorts? Those have all been longs. Here's some shorts that I think these stocks. Tupperware, this is a stock, it's only a $7 stock. It does not show me anything, and now it's starting to roll over again. The one thing is that we did see some good volume back on July the 5th, but the stock, it does not appear to be going anywhere. I don't like the deep corrections. The recent bounce didn't get us anywhere. Now we're starting to roll over again. So you short that with stops at like 740 or so, and I think it eventually gets back towards lows. Lemonade, LMND, also a very big laggard, and one could put this as part of the growth bucket, but this does not. This is even weaker than a lot of the ones we looked at today. So this to me looks like it's going to roll back over to new lows, and one that I'm not really in love with here. Virgin Galactic also showing some evidence of rolling over. We had, a decent move from $5 to about $8. Now, as of today, this is really breaking trends going back since early July. Not a great move when we do that. And you see this really starting to roll over again. So I would put that as part of my short bucket. And Goose, GOOS, slowly trying to bottom out, but hasn't shown us anything. Today's going to close at new 3-day lows. I like this to pull back also in the weeks to come, GOOS. For those that attempt any of these shorts, important to use stops. And for that, that's going to be really only a move above 1993, and I would just get out right away. Let's see, TXG. This is another one, 10X Genomics. And wow, this is really, really weak. And so pull back under recent lows, consolidating, hasn't really shown us anything. But yeah, you can't stay short if it starts to move up and really get up over the highs of consolidation. So, take those with really a grain of salt. Wheat and precious metals. I think gold and silver likely are in the final stages of their decline, which mean that about 2 weeks, most of them could turn out to be excellent buys. For now, I think that, the move in silver you're seeing today and wheat directly related to that, that's really going to lead this still a bit lower. Silver down 1.5%. So silver likely has a date with $17. It's at $18.33. So Wheaton could be something to consider on the short side. And I think in the days to come, this is going to likely drip down below $30. And then, we could potentially reverse that into, the middle of next month and start to get long some of these. But for the time being, precious metals still on the short side, but keep stops a lot tighter. Starting to see a lot of, long. You're seeing a lot of the specs start to get really, really short, and that's or getting short for the first time in a while. And that's a little bit of a concern that we're getting close, and the hedgers continue to raise their long exposure. So we're getting close, but I don't believe we're there just yet. But there are going to be some opportunities. I think the dollar still looks to me like it's going to move to new highs, new monthly highs, and then we'll roll over. And so when we see that rolling over the dollar, along with yields really starting to roll over also, that will give us our green light to be really long the metals. And I'm not certain when those line up, but things like silver and gold have just really been carried out. And so these are, more attractive to me from a counter trend perspective. And I think any move down under, 1680 for me is going to be a chance to get long gold, likely in the first week or two of August. That's all the time we have. So thank you. We have gone over, but I wanted to give you a little extra time because I ranted and raved at the beginning and gave you some market thoughts before we got into our picks. But thanks as always for tuning in. I do appreciate your support, and feel free to leave comments with inquiry@FSInsight.com, and of course get onto the website, vote the stocks you want me to talk about. Happy to always give time and make myself available doing these things, and hopefully that provided some value and a little bit of insight as to how I look at the world. So thank you and have a great day, everybody.